You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition, we'll be looking at Nigerian banks in the face of forbearance exposures and recapitalization, tackling the new normal. My guest for this conversation is Mr. Marcel Okeke, a financial analyst and CEO of Mascot Consult. It's nice to have you, Mr. Marcel Okeke, to discuss these developments around the banking industry, which is a really critical part of the economy.
Thank you very much for having me on this program.
Yes.
That's a lot to say.
Let's first begin with your perspective on the recent circular by the Central Bank of Nigeria, where it stated that for banks that are under forbearance, they are to suspend dividend payments to shareholders, suspend bonus payments to directors, and also they are to suspend further investments in their foreign operations or subsidiaries. Was this the right timing, considering the fact that we're in a recapitalization phase for the banks? How do you look at this timing and of action?
Well, let me say thank you for this question. Let me say, as an economist, on one hand, it is good that the CBN, came up with that circular at that point in time, because it's always concerned about the stability.
Yes, financial system stability, yeah.
Not, individual players per se.
Yeah.
To that extent, it's good. But on the other hand, you start looking for justification for the CBN to issue such an alarmist circular, especially when it gave a large room for all kinds of suspicion and rumors as to which banks are really involved. At this point in time, you understand, the banking sector or system, financial system as a whole, are usually information sensitive. So that once some kind of information comes into the system, it starts shaking everywhere. You understand? So in an industry where you have over 20 banks and you issue a circular saying some of them, you understand, are beneficiaries of this forbearance arrangement. Business. Which one? So it generates all kinds of suspicion. You understand? Let me say that is a demarketing for the entire industry. More so, those who are still struggling, to meet the new recapitalization level. And before you know it, the CBN itself, apparently realizing the harm it has done, has gone to issue another statement.
Reaffirming his commitments.
Reaffirming his commitment and trying to douse the tension it generated in the first place. Yes. That there's no cause for alarm. That what they have done is a normal thing in the system. You understand? Yes. So if they did not do the harm they did in the first place, they wouldn't have come with a second circular. You understand? But like they say, it's like they have kind of caused a storm in a teacup. And so the thing keeps shaking. You understand? So even the assurance after the first circular, through the second circular they have issued, if you like, say the harm is already done. Especially for those of them who are still in the market trying to raise money. Perceptive investors will want to know which banks really are involved in this thing. You understand? And so somehow investors could adopt a wait and see kind of attitude. Let us see what happens. Those that will come clean, and so on and so forth. And ideally, the CBN should have approached these banks individually. You understand? Because they are in touch with the CBN on a daily basis.
Yeah.
You understand? And more so, when the forbearance team is not as if they are unilaterally running foul of any law. You understand? It was a situation that arose mutually.
Yes.
The CBN approved that they do what they did, to get this arrangement before they went into it. So why now go to shout to the whole world as if there's any danger anywhere?
Yeah. And some of the analysts like Renaissance Capital, like Emerging and Frontier Capital, released the analysis around it and the concerns like you raised around the fact that recapitalization is ongoing, and then you created that. But some banks have also responded, published on ProShare, their assurance to stakeholders and investors that, look, this whole issue, they're going to clear it, there are no issues, and they're committed to ensuring that there's stability. Isn't that showing some level of stabilization based on the fact that, yes, you said there was a storm in teacup, but now we're seeing various responses and assurances?
It is even to tell the whole world that there's no really cause for the CBN to have done what it did. And that is why some of the banks, had to brave it.
Yes.
You understand? To issue statements. You understand? To say that whatever happens by the closure of the first half of the year, that they would have cleared everything.
Yes.
And what is the end of the first half of the year? It's the end of this month. So meaning there is really no cause for alarm that the CBN is raising in the first place. You understand? I don't want to go mentioning those banks.
No, definitely.
But they have issued statements assuring all stakeholders, assuring their shareholders, and they are likely going to pay interim dividend half yearly as they normally do. You understand?
Yes.
What you see here, you are the CBN has issued a kind of blanket statement. You will not pay dividend. You know what that means to shareholders?
Yeah.
You understand? Who are already expecting this interim dividend any moment from now.
Yes.
You understand? And you are telling that their bank is no longer fit. You understand? To even pay that interim dividend. So, I mean, it's too alarming.
That dovetails into my next question. Is it an issue or a challenge now between money market and capital market activities? Shouldn't we see some synergy between monetary and capital market authorities whereby there's a coordination or coherence in the sequencing of communication? Because you just talked about shareholders. That's under the purview of another regulator that regulates the capital market.
Yes. Well, that is why I will say in all honesty that the central bank should have done what it has done. Because what it means now is that now it has kind of raised a red flag. You understand? So that the shares of the banks that are quoted on the stock exchange, and now that the banks that the CBN ought to have interacted with are coming out or are being suspected all over the place, it will affect their share prices somehow. You understand?
We've seen that tracked by process.
Of course, it will affect them. Like I told you, there could be a wait-and-see attitude by prospective investors. More so, those of them who are still in the market to raise money. You understand? And the CBN has raised this red flag. Those who want to invest in those companies, in those banks, can say, let's see what is going on. Let's see which ones come clean. You understand? And the CBN is not in a position to now tell the whole world at the end of the day, we have cleared all these banks, so they are now clean. It will not do that. Meanwhile, it has raised unnecessary dust by that statement. You understand? So the share prices of these banks are likely to go down. Those who are still looking for funds in the market are likely to have challenges. You understand? So some investors will decide not to invest in those banks again because they won't even know when they are out of this challenge. Who will tell them? You understand? So these are the problems. But saying about coordination between the capital market regulator and the CBN and all that, they are supposed to be a transcendental body, if you like.
The financial market regulators.
Something coordination committee, where the CBN and the other money markets and capital markets are supposed to be coming together. But I don't think that body is effective. You understand? But even at that, I am still saying that the CBN ought not to have issued this kind of statement. You understand? It should have discreetly, sent the circulars or whatever letter to each of these banks. And within a short while like this, they will just clean their books. You understand? When you say sole obligor limit, you understand? It's a question of that a big company needs big money at a point in time. And the banks found that viable to invest in it. You understand? And the CBN approved and said, go ahead and give them so volume of money that you want to give. That's it. You understand? So they did it with the approval of the CBN at that point in time. And nobody has said even now that they have violated any law. So, therefore, there wouldn't have even been any need for the capital market regulator and the CBN to start clearing this kind of routine thing. You understand? But the CBN, the way it now went about it, has kind of raised dust in the system that will have impact both in the money and capital market. You understand? The times are so a lot of challenges here and there. There are a lot of everything is volatile. You understand? So this kind of information coming into the system now, we have both local and global impact. You understand? Because he has also said those who will not invest outside.
Foreign, yeah.
Okay? And so on and so forth. So the whole world, and you know, we are now operating in a global village. So the whole world is watching what is happening in Nigeria.
Yeah.
And it will affect these banks. And those their subsidiaries outside. Or where they propose to invest, you say, hold on until you have done this.
Yes. Now, recently, ProShare released its 4th edition of its Tier 1 Banks report, looking at bigger, braver banks, coming on board. And of course, the Tier 1 banks were listed again, which are the Fugazi. From this development, what's the outlook for the banking sector? You said that these signalings are very important. It could affect investor mood and all that. What's the signal or the outlook for the whole banking industry as we are in the recapitalization phase, and also overall the strength of the financial system?
Well, notwithstanding what has happened or what is even happening now, the banking system is healthy. We all know that. You understand? Good enough, the so-called affected banks have issued statements assuring their shareholders, assuring all stakeholders that within this June, they will come clean. You understand? The central bank itself has issued a statement assuring everybody that there is no cause for alarm. Okay. You understand?
Yes.
So all this will go ahead to restore normalcy in the shortest possible time. You understand? So even those in the market, they have their track record to show. You understand? They have their track record. They have their document, they have their papers, everything to the perceptive, prospective investors. So they will still do the needful, and the system will keep moving. I don't see what has happened, causing any serious harm to the system to the extent of, being an impediment or a kind of drawback or a kind of hurdle for those that are in the market to raise a new fund. I don't, at the end of the day.
And still speaking about financial system stability, what do you like to see happen as we gear up for another monetary policy committee meeting much later, and also at this time, looking at the economy at the wider sense? And what feelers are you getting from your stakeholders, from colleagues and all that around this recent development as it impacts stability?
It is high time the CBN started coming down in terms of MPR, the monetary policy rate. The tight monetary environment it has created, you understand, when it kept raising monetary policy rate from around 18% in June 2023 to 27.7% since the last quarter of last year. It has a lot of negative impact on the economy. Because if you want to raise any facility from any of the banks, the effective interest rate will be at something percent. Do you understand? So how many companies can afford that and still remain viable and profitable? Yeah. You understand? And if you look back in the past 2 years or so, there's no company that left Nigeria that did not refer to the tight monetary regime here and the negative impact of the foreign exchange regime here as reason for their exit from Nigeria. You understand? So what have we gained? Instead, we have gained what is called hot money. And that hot money is this. The Central Bank of Nigeria has been selling FGN, treasury bills and instruments, attracting investors, foreign portfolio investors, essentially. You understand? And parading billions of dollars that they have raised. But this is hot money. You understand? Foreign portfolio investors, not foreign direct investors.
FDIs.
You understand? So that kind of money is called hot money. It's so unstable because people whose portfolio they are carrying, truly.
Yes.
You understand? So, and they jump around. More so since Donald Trump's coming on board in January this year, the world has entered into a new world economic order. You understand? And so such foreign portfolio investors are becoming more discerning. You understand? And there are a lot of indicators. Nigeria has been projected to the world as an insecure environment. So the only thing they now manage to bring in here is a portfolio. You understand? And because of that, they keep moving to various locations. Okay? So not just looking for profit, but looking for where they will invest and they go home and sleep. You understand? So with all this, I will suggest to the CBN that when next they meet, they find a way of loosening this tight situation. They claim that the Central Bank of Nigeria is fighting inflation through orthodox monetary policy. It cannot do that alone. You understand? Yeah. There should be monetary, fiscal alignment. Serious one. You understand? And even when there is that alignment, there's also the external angle that are entirely beyond the control of Nigeria. You understand?
Yes.
Now that Trump came in and he's talking about tariffs here and there and keeps moving the thing up and down, how do you control that one, for example? And how do you control Nigeria's penchant, well-known penchant for foreign goods and services? You understand? Their test, the propensity to consume foreign goods in this country. So that no matter the kind of policy you put in place, they will continue to get what they want to get. You know? Even if it's by illegal means.
Yes.
And so on and so forth. So, but officially, let that central body that dictate, because it's a benchmark interest rate, monetary policy rate, it only indicates the direction to go. If it now comes down from that 27.5, it's now indicating to banks, you understand, and other institutions that we are now going down. While the physical side will also be doing something to that effect.
Yeah.
But what has been happening over these past 2 years is that what is happening in the physical side appears to be a counterpoise to what the CBN is doing. And which is why the CBN is doing what it's doing, the federal government is going all over the world borrowing. And such money flowing into the system. You understand? So how do you arrange those things for them to, work in harmony? That should be the target of the CBN.
So it's time for CBN to loosen its monetary policy stance.
Yes.
And also very important that monetary policy and fiscal policy align.
Alignment. Very
and
important.
Of course, signaling from the central bank is very important for financial system stability.
That is it.
Thank you very much, Mr. Marcel Okeke, financial analyst and CEO of Mascot Consult, for this very interesting and enlightening conversation on Nigerian banks in the face of forbearance exposures and recapitalization, tackling the new normal. We know that the banking system is very critical, and whatever happens there continues to be an interest for all stakeholders. Exactly. Thank you once again for the time.
Thank you, Abasi, and your team.
Thank you.
You're welcome.
Thank you. To our viewers, that's the interesting conversation we've had today on the economy and politics discourse. If you want to get further insights on this, log on to our website displayed on the screen and also follow our social media platforms. Till we come your way again, thank you for watching. I'm Ottoabasi Abasiekong. Bye for now.